Choosing the best stocks to trade is one of the most crucial steps for day traders. A well-chosen stock can provide an opportunity for traders to make profits, while a poorly chosen stock can lead to losses. Therefore, it's crucial to understand the factors that contribute to selecting the right stocks to trade. The first step to choosing the right stocks is to identify the ones with high liquidity. Liquidity refers to how easily a stock can be bought or sold. And when a stock is highly liquid, it helps ensure that there's enough buyers and sellers actively participating in the market, ready to execute trades. When a trader places an order to buy or sell, there has to be someone on the other end willing to match that order. For example, if I wanted to buy 5,000 shares, someone else has to be willing to sell me 5,000 shares. So when a stock is highly liquid, it means that there's a higher likelihood of finding a counterparty willing to transact at the desired price. This leads to rapid order execution, allowing traders to enter and exit positions swiftly. For instance, if a trader wanted to purchase 10,000 shares of this stock, only averaging 3,000 shares per minute, then it might be a little bit harder to get the entire order filled because there's not enough active participants that could match that order. So when it comes to day trading, we want to stick with stocks that are liquid enough to fill our orders, which will be stocks trading on higher amounts of volume. The second step is to look for stocks with strong price movement. We call this movement volatility, and it's the measure at which the price increases or decreases over a period of time. If a stock only has the ability to move from 1158 to 1173 for the entire day, then there isn't really enough room to make a decent profit. So a stock that has low volatility isn't something that we really want to trade, because you would have to almost be perfect at buying at the very bottom and selling at the very top just to get a small gain. And that could be quite difficult to do. But if a stock has more volatility or range to it, then it's going to be much easier to get a decent profit. As you can see here, this stock moved from 451 to 724, and even if we didn't buy at the very bottom and sold at the very top, just getting a small piece of it can still give us a decent percentage gain. So stocks that have a little bit more range to them is what we're going to be looking for. The third step is to look for stocks that are exhibiting price behavior that is predictable. Now, this can be a little bit challenging and a necessary aspect of trading because it requires analyzing a lot of data. It requires looking at specific patterns and figuring out the odds of how price will likely behave going forward. And once you recognize these patterns, you'll be able to identify reliable entry and exit points, facilitate effective risk management, and it also empowers you to trust your strategy and execute with conviction. So in this chapter, I'm going to be showing you how to search for stocks with these three characteristics. I hope you all learned something, and I'd like to thank you so much for watching.